Vanakkam. Today I am going to cover export of goods and services and FEMA because this is very important because everyone wants to export goods from India to abroad. What are the rules and regulations that they have to follow, and everything will be clearly stated in this portion. This is going to be FEMA series number 7, and since the syllabus of export and goods and services are vast, so I have decided to present the paper in parts, say in part 1, part 2, part 3. So in 3 parts or 4 parts, I have decided to present the paper. It's a very interesting session, and please concentrate, because if you want to go and do the export, this is a very important area wherein you have to concentrate. And before going to that, I want to say a disclaimer. The views expressed here in the program are my views only. The viewers or members are requested to read FEMA, that is Foreign Exchange Management Act of 1999, to arrive at their views and opinion. I am not responsible for any interpretation and clarification to anyone who is watching this program, because you have to please concentrate on FEMA and act accordingly. This is only a knowledge updation program to you. And now I am going to start with the export of goods and services. With the introduction, I want to say that it's any export, it involves foreign exchange transactions. It has to be carried out current account, through current account transactions. You have to carry out all foreign exchange transactions, because you are going to export the goods and services. You are going to bring the revenue, that is in the form of one currency, into India. That is called as foreign exchange. And those currencies should be freely permitted to be converted, freely traded, freely converted. That procedure should be there. But every foreign exchange transactions have been regulated by Reserve Bank of India. This is a very important thing. Even FEMA is being regulated by RBI. And all the export and goods and services have been consolidated. All the things have been consolidated through RBI Master Directions Circular number 16/2015 and 16. Please go to the RBI site and you can take note of it and you can concentrate. Now, taking or sending of the goods. So here, what export means, the definition it says, and the FEMA is export includes. So you have to take the goods or send the goods to outside the country by way of what manner. So you have to send goods by land, sea, or air. This is only 3 methods wherein you can send the goods or goods by land, sea, or air. And you can send the goods either on consignment basis or on sale, lease, hire purchase, or under any other arrangements by whatever name called. This is a very important thing, because you can export the goods based on this sale, lease, HP, or even on consignment basis, or any other arrangement by whatever name called, that is being included in the definition of export of goods. And for software export, you can also do the software export, but it includes transmission through the electronic media. So software you can export through electronic media, that is transmission through the electronic media. And introduction of export and goods services with reference to software. So this is the thing I want to wish all the best to the members and viewers. This is my details are here, and if you want to have any clarification, you can call this number. Then introduction of export and goods and services, and what these services means. It says it means, but in goods it includes. So it says service of any description which is made available to the potential users, and it includes. Now they are saying that it includes the provision of facilities in connection with banking, financing, insurance, medical assistance, legal assistance, chit funds, real estate, transport, processing, supply of electrical or other energy, boarding or lodging or both, entertainment, amusement, or the purveying of news or information. So these are the things. FEMA, under FEMA, they clearly say this. These are specific things which have been included in the connection of services, but it says that include. So that means you can include anything here. but it does not include. That is, if you are given any free charge, free service, or any rendering any service free of charge, so no cost is being charged to that services that are not included, but under also under a contract of personal service, that does not form part of the definition of services. Now, who controls the export trade transaction? This is very, very interesting thing, because all the export trade regulations have been carried out by DGFT, that is Director General of Foreign Trade, that is through its regional office. See, every DGFT has got a regional office, and it regulates export of goods and services. So DGFT, suppose we want to do the export, and if you want to have any directions, you go to DGFT, you will get all sorts of information. And in entire India, that is all over the country, we have got 37 regional offices of DGFT. It has got 4 zonal offices. So this is information. Just I want to say, so in Tamil Nadu, you have got something around 3. I heard it is 2 is confirmed. I don't know whether it's a 3 DGFT are there on, but each and every state you have got DGFT office, DGFT regional office. So DGFT, but it comes under the Ministry of Commerce and Industry, Department of Commerce of Government of India. So this is only an information I want to say, but all export trade regulations have been controlled, have been regulated by DGFT. And DGFT announces policies and procedures of export trade from. So who is going to announce the policies and procedures? It is DGFT with reference to export, and regularly they are announcing the policies and procedures with reference to export trade. And central government forms rules of the export of goods and services, because central government is responsible for FEMA. So FEMA is, the power has been given to RBI, but RBI in turn they given the DGFT to regulate. So central government forms rules of EGS, that is export of goods and services, and RBI gives directions. So forms ruled by central government. RBI gives direction of export of goods and services, and DGFT announces the policies and procedures. And the main person who is going to do all this type of export trade regulations or foreign exchange transactions are the authorized dealer category 1 banks. All other persons who have been authorized as AD category 1. AD means authorized dealer category 1. So banks, they are doing in India, banks are doing main business of foreign exchange. So it conducts foreign trade with the foreign trade policy in vogue. So now AD category 1. So AD1. So AD1 means AD category 1 bank. It can issue guarantees for the exports bills, exporting. Suppose if any exporter wants to get the goods outside, and they can give guarantee to that supplier on behalf of the export client. So AD category 1 are the only person who are eligible to issue the guarantees. And this is because due to the exports done out of India. So they want to do the business out of India, but these guarantees will be issued with subject to some specified conditions. There are a lot of conditions that we will see on a later part. So issue of guarantee is being done by AD category 1. And now you are exported the goods. Now you have to prepare the, you are going to export the goods. Now you are going to prepare the invoice. So you can prepare the invoice. There is no restrictions. There is no restrictions. You can do the invoice in rupee, in as well as in other currency, foreign other currency which are freely convertible. Say dollars, other dollars, pounds, yen, franc. So all this you can do it. So rupee or freely convertible currency can be mentioned in the invoicing, and when they send the bill for collection, the process have to come to India. So the realization should be very easy. So it is used for realization of export process. So the currency is very, very important. So it has to be clearly mentioned in the invoicing. So export process against specific exports may also be relation rupees. Suppose if they say that suppose they have opened account in India, but if anyone wants to send the money, they can send the money even rupee. But it is with reference to specific exports. It has to be clearly mentioned in the invoice, and you have to get a specific permission from RBI because you are bringing the money into India in foreign exchange. So export process against specific exports may also be relation rupees, provided that it is to be on the freely convertible Nostro. So Nostro account is account opened by Indian banks, Indian-based banks at abroad. Nostro account is account opened by foreigners or non-resident in India. So Nostro account of a non-resident situated in any country. So what they will do, because in Nostro account only rupee has to come. So this non-resident, he can, with the permission of RBI, he can open Nostro account outside the country, but he should be the member other than the Asian Clearing Union, ACU, other than the member country of the Asian Clearing Union. And reference to RBI. Suppose these type of things you have to make if you got any problem or if you want to convey anything, the AD bank that is authorized. Hereafter, I want to say that AD category 1 bank means bank. If I mention bank means it is AD category 1 bank. So reference first the bankers they have to make to regional office of the foreign exchange department, because they are going to export this amount of foreign exchange, they are going to bring the foreign exchange to India. These things they have to inform the foreign exchange department. And the jurisdiction where the applicant resides are the firm company functions. That is the original jurisdiction. Suppose if he is residing in Chennai, so that is the original jurisdiction. If he is residing in Hyderabad, that is the original jurisdiction. Suppose if the administrative office or say register office is at Mumbai, so that is the jurisdiction. From the jurisdiction of that regional office has to be in. Then apply to regional office to deal with different jurisdiction with reason. Suppose instead of in regional, that is a foreign exchange department of RBI has got officers at each and every state. Suppose if you are residing in Chennai, but if you are reporting to Mumbai RBI, then you have to give, you can do it, but with the reasons. You have to inform him why they have filed the reference with a different jurisdiction. That reasons you have to give. Next important point with reference to export of goods and services. So you have to decide what is the period, whether it's a calendar year or financial year or assessment year or previous year, but with reference to FEMA, financial year, under financial year, it is based on the export rule, because the export trade carried out during the financial year has to be reported to regional office of RBI. And normally financial year means it is April to March is the financial year. Now, you have exported the goods. Now you are going to realize the funds. So realization, repatriation of profits of export of goods and services and software. So you have sent the goods, the invoice is being sent, but the money has to come into India. So it's an obligatory duty on the part of the exporter to realize full value of the export of goods, services, and services software within the stipulated period of data from the date of export. So thing is, why it is 100%? Because whenever any exporter exports the goods outside India, they will get the incentive from the government in various forms. So when they receive the incentives, they have to bring all the foreign exchange to India. So it is an obligatory duty of the exporter. He has to do it. And on consultation with Government of India, the process have to be come into India within 9 months from the date of export. This is the period allowed from the consultation of the Government of India. So the realization of process will come into India within 9 months from the date of export. And due to COVID-19, the government has extended to this 9 months to 15 months from the date of exports, but for exports made up to March 20. And not after that date. So this is the thing you have to remember. So COVID situation, the realization of profits have been extended to 15 months, but this is related to the exports made up to March 2020. But goods, if they are sending the goods to warehouse, and thereby they are retaining the goods at the foreign country's warehouse. So from the date of shipment, within 15 months, the export process have to come into India. The very, very important thing. So whatever goods that have been exported from India, the money has to come into India. That is the duty of the exporter to bring the entire money, entire foreign exchange into India, because then only our country has got favorable balance of payment. Next question is manner and receipt of payment. How we have to receive? So full value of export of goods have to be received by authorized dealer as per FEMA. See, exporter, he has exported the goods. Money has to come to the no-show account of opened by the AD1 bank, and from there the money has to come to India. So it is a duty and responsibility of the authorized dealer to bring money back to India. So it is a service which has to be provided by the authorized dealer. So full value of goods and services to be received in India. Export value in case of lease, hire purchase, or any other includes charges by whatever name called. They can say that, so instead of sales, they can say that it's a lease rent, hire purchase charges, or any other charges they can mention. But all this have to be brought into India by through authorized dealer. The money has to come into India. Now, payment received through the credit card. So that is also allowed. Suppose the money can be come directly from no-show account to the authorized dealer. Sometimes if the buyer visits India, buyer has come to India, he has purchased goods, but he has got credit card in his hand. Thereby, he is making payment to the supplier here, that is exporter, but that payment should be made in the foreign exchange. So for this, he has to get the statement from the foreign country that the money has come in foreign currency. So goods sold to the buyers through their visit to the buyer. He has come to India, the goods have been sold, and EDF will be issued, that is export declaration form will be issued by authorized dealer only when funds have been routed through the no-show account or on production of a certificate by the exporter from the credit card servicing bank that it has been received in equivalent amount in foreign currency. So the amount, EDF, the export declaration form, who has to issue it is the authorized dealer bank. He has to issue, but come into India either directly through no-show account, credit card. But credit cards, the exporter has to get a certificate from credit card servicing bank that the money has been received in equivalent amount in foreign exchange. This is a declaration he has to give, and debit to the credit card of exporter where the reimbursement from the credit card issuing bank or organization received in foreign. Suppose if they made some expenditure, then that expenditure is being reimbursed to the importer, and that should be also received in foreign exchange. So the main point here is we have to see that the payments must be received in the form of foreign exchange, either direct credit or to no-show by way of payments through credit card. This is the thing, only thing, whatever amount of goods you have exported, the money should come only in the form of foreign exchange, not in Indian rupee. Processing of export related receipts through online payment gateway service provider. So this is also another that is OPGSP, online payment gate service provider. Through that also money will come into India. So what are the methods? So here authorized dealer, first the authorized dealer has to enter into agreement with the OPGSP for repatriation of export goods related remittances, because the supplier, that is the buyer of foreign buyers, he can make the payment directly to OPGSP. Then OPGSP in turn, they have to transfer the money to authorized dealer. So that is permitted, but only the authorized OPGSP are allowed, only those persons are allowed to receive the payment towards the repatriation of export of goods. So authorized dealers, they have to enter into agreement. What are the basic conditions are? Due diligence had to be carried out on OPGSP by the authorized dealer. This is a due diligence. Without due diligence, no money has to be transferred to OPGSP towards repatriation of export of related remittances. Then facility on EGCS available. So export of goods and services facility. So you can remit only up to $10,000 US through OPGSP. Beyond that, OPGSP should not be allowed. The transfer through OPGSP is not permitted. Then authorized dealer has to open a no-show account to transfer the funds. The foreign buyer has sent the money to the online payment gateway service providers. Then this money has to be transferred to the no-show. So exporters, so what they think the exporters they have to do, they have to open a notional account with OPGSP. Then all the OPGSP, what are the amounts that has been given credit to OPGSP will automatically sweat into no-show collection account of authorized dealers. So this is a very, very important thing. And another thing is, fourth one, a separate no-show account to be opened for each OPGSP in order to identify the transaction of OPGSP. Suppose there are 4 online payment gate service providers. So the no-show account has to be opened for each and every OPGSP. So this account has to be transferred to account no-show 1 account, no-show 2 account, 3 account, 4 account. So this is also another condition. You have to open a separate OPGSP no-show account. And permitted debit in no-show account or repatriation or export process and fees and commission to OPGSP and charges paid to importer in case of exporter failed to meet. It's nothing but permitted debit from no-show account. What are the permitted debits are? So suppose you have to pay some commission, you have to pay some fees, and you have to meet the importer's charges. That is permitted in the no-show account. Then balance in no-show account. So now you have opened a separate no-show account. Then you are from OPGSP, the money has come to no-show. Then this balance has to be transferred to the respective exporter's account in India within a period of 7 days from the date of credit to the collection account. So no-show account is a collection account. Within 7 days, the money has to go there, and from there, the money has to come to India within 7 days. So this is a very, very important thing, and is then bank has to satisfy the bona fide transactions of OPGSP and whether RBI instructions have been followed. It's very, very simple, sir. OPGSP is also allowed to receive the foreign exchange transactions on behalf of the exporter from the foreign buyer. Then after taking that charges, they have to transfer the fund from OPGSP to no-show account. By exporters are asked to open separate no-show account for each and every OPGSP transactions. And within 7 days, they have to transfer the fund to India from the date of collection, from the date of credit to the collection account. And it is the duty of the authorized dealers to verify the bona fide transactions of the OPGSP. And if it is not there, then that OPGSP should be de-recognized by the authorized dealers. And it is a duty of the authorized dealer to see whether RBI instructions have been properly followed by the OPGSP units or not. Next thing is authorized dealer, he has to report all the relevant information to Reserve Bank of India, and each no-show account. So here I want to say a professional opportunity to the chartered accountants. Each no-show account collection has to be audited on a quarterly basis. This is a very, very important thing. You can take note of it. Suppose if any member is watching this program, they can take note of it. It's a professional opportunity available under FEMA. Each no-show account has to be reconciled with OPGSP, and this is subject to quarterly audit. And OPGSP is responsible for compliance against export payments in India. Suppose if anything goes wrong, because OPGSP is has already entered agreement with the authorized dealer bank, and if anything goes wrong in the exports, and if any with respect to export payments, then OPGSP is responsible. OPGSP, online payment gateway providers, are responsible for the compliance. Then authorized dealer who is desirous of entering into transaction with the OPGSP, each has to be reported to each and every OPGSP transactions, and everything has to be reported to Foreign Exchange Department, Central Office of Reserve Bank of India, Mumbai. Again, a startup can realize the receivables of its overseas subsidiary and repatriate the same. Suppose if it's a new unit, it's a startup unit, they can receive the receivables through OPGSP, and that money can be repatriated into India through OPGSP. Now, money has been received. Now you have to settle the thing, settlement system under the ACU, Asian Clearing Union mechanism. So there are 6-7 countries, they jointly formed the Asian Clearing Unit. How they are going to settle the amount to the no-show account of the authorized traders. So they are permitted to do it. This is also permitted under FEMA. So to facilitate transactions and settlements with the effect from 6/3/20, ACU means Asian Clearing Union participants can settle either in ACU dollars. They say that normally we are saying that it's dollar, yen, and euro. Now, but if the Asian Union, Asian Clearing Union, they participate, then they will be called as the currencies will be called as ACU dollars, ACU euro, ACU Japanese yen. Actually, this should be equivalent to the dollars, euro, yen. It's very, very simple. It is only a dollar, euro, yen, but it will be called, it is being called as ACU dollars, ACU euro, and ACU Japanese yen. And authorized dealers are open and maintain account with their corresponding banks in the ACU dollars, and payments have to come to that account. So these bankers, they have to open a separate account and maintain the account with their corresponding bank in ACU place. That account will be maintained in the form of ACU dollars, euro, and yen, and all the payments have to come to that account. Now, from that account, the money has been converted into India. But with reference to Indo-Myanmar trade, now Myanmar is in, I think, still we have got some foreign exchange problem. Relaxation from ACU, what they say that with reference to ACU, Myanmar is also part of the ACU part member, but the relaxation has been given by the FEMA that the money or trade amount can be settled in any easily convertible foreign exchange in addition to ACU mechanism. If they want to transfer in ACU dollars, union, euro, and yen, it is permitted. But if it is not there, if it is not available in case of Indo-Myanmar trade, then any easily convertible foreign exchange can be allowed. Next, fourth one is with reference to Iran, current account transaction, trade transactions, importers and exporters due to face a lot of problems. This is with effect from 27/12/20. They change that settlement can be made in any permitted country outside the ACU mechanism till further notice, because Iran is also part of ACU. It's a current account transaction. Now we have got problems in political problems in Iran. So they want to settle the amount. You have exported the goods, you want to realize it. So in the circular, they say that with effect from 27/12/2020, though Iran is a member of ACU, they can transfer the money in any easily convertible foreign currency outside the ACU mechanism till further notice. So this is the latest thing. And using no-show account, ACU clearing members can settle themselves in dollars. So from ACU clearing account, you can transfer the money to no-show. So it will be, say, you can convert ACU dollars, euro, and yen to the no-show account. But with the effect from 1/7/2016, because Britain, they want to come out of the euro concept. So euro, with reference to ACU, euro, they want to come out. This may be due to Brexit due to Britain now. They want to come out of the euro thing. So this has been temporarily suspended, and still we have to get the instructions. And now you can directly receive the money, but you can also directly make the payment to the third party, but as well as you can make the payment, you can receive the payment from the third party. How is it possible? Suppose when you do the export, there will be a tri-party agreement between the exporter and the buyer, and as well as the third party. Because instead of sending the money to the goods, you can send the goods to the export buyer. Export buyer, he has to make the payment to the third party, but that's a tri-party agreement. So instead of export buyer making payment, the third party, he will make payment to the Indian supplier, who is called an exporter here, and buyer, foreign buyer, he will make payment through the third party because of this third party agreement. So third party payments are allowed subject to the following conditions. There are a lot of conditions for this. Condition is the firm should have irrevocable order in tri-party agreement should be, and tri-party agreement should be there. Should be irrevocable, that is export order should not be cancelled, and there is a tri-party agreement should be there, and tri-party third party, that is a tri-party agreement should not be insisted in case if there is any documentary evidence to prove that the third party payments and availability of the third party names are there. And authorized dealer should satisfy with the bona fide transaction. So the person, he is the authorized dealer, is responsible for each and everything. He has to take care of the money, that is export process to come to India. So the authorized dealer, he has to satisfy that with a bona fide transaction, that export documents such as invoice, foreign inward remittances certificate, everything he has to verify and do it. So authorized dealers have to consider that FAT, that is Financial Action Task Force. So they can do it. They have to verify whether is there any thing that that is going wrong. So everything the authorized dealer has to verify, and all the FATF statements have to be verified by the authorized dealer while handling the transactions. So and this money should route through only the banking channel. So no outside transactions are allowed, but should route through only through the banking channel. So exporters to name the third party in EDF, export declaration form. So exporters have to clearly mention that the third party is going to make the payment. So it is the exporter's responsibility to repatriate the above amount mentioned in the EDF, because you said that you have exported the goods. It is the duty of the exporter to realize the money to India. So it can be directly realized or through the third party. So it is the exporter's responsibility to bring the money into India. And export outstanding statement should be there. And this should be reported to RBI. Report outstanding amount against the name of the exporter and the name of the third party, and not the name of the overseas buyer. Because exporter has exported goods to the overseas buyer, and there is a tri-party agreement. Who has to make the payment? It is the third party. So what is the outstanding between the third party name and the exporter, and the name of the overseas buyer should not form part of the export outstanding statement. Export trade to a country in group 2 restricted countries, that is Sudan, Somalia, payment has to be received in open cover countries. It is, what is that? Open cover countries means in the open market they have to receive the payment. So in imports, invoice and shipping documents should clearly mention the name of the third party with reference to payment. This I will explain with an example, that you have entered into contract for the one overseas supplier, but that overseas supplier, he has to buy from some other party. So in order to avoid cost, they have entered into contract that I will supply the goods to you, but you have to make the payment to the third party. So if that is the authorized dealer, he has to satisfy himself and he has to bring the money to India. This is the third party thing. Open cover transactions and restricted cover transactions. This is with reference to ECGC, Export Credit Guarantee Corporations. Based on the internal risk, they are saying that countries open for the operation. So they can give the cover. That means it's just like export credit guarantee cover. So guarantee cover is being given without no restrictions. So it is possible, but cover is now for normally on normal terms and conditions. That is for the 90% cover ECGC they will give, and 4 months waiting period for ascertainment of loss. So see, the transaction is over, you have made the claim, but they will wait for 4 months to ascertain the loss and settlement of the claims with reference to there is a open cover by ECGC. And countries with the restricted cover, because due to some political problems, due to some restrictions, the ECGC, they are not giving, they restrict the terms and conditions. So countries where instabilities are noticed, either in politically or economically, restricted cover will be there by that is Export Guarantee Corporation, Export Credit Guarantee Corporation will not allow the claim. It's on the restricted basis, permits risk in selection only. So they say that only for this purpose we are ready to give the guarantee, and not for other purpose. It is there in the restricted cover. Now the risk is divided into two categories. That is, it limits the risk is limited to only for 1 year and only for the specific approval. So we extend the risk only for the specific approval. We extend the risk. We will consider only the risk. That to this risk we will cover only for the period of 1 year. So this is with reference to open cover, because these are the important things that you should know. You are going to export the goods. What are the items that? What are the things that you should know that we have to see? Settlement of export transaction in currencies which has got no exchange value, no direct exchange ratio, no direct exchange value. Suppose $1. Suppose we want to go and buy for the currency which has got no direct exchange ratio. So how to handle this situation? This invoicing is freely, because as per the norms, you can prepare any freely convertible currency, but does not have direct exchange rate. In direct $1 this rupee, £1 this rupee, 1 rupee is this dollar. So if it has got no freely, it has got no direct exchange, that is also permitted in this category. AD1 permit the settlement of exchange, settlement of export transaction, excluding those put through the ACU mechanism. So if you are doing with ACU mechanism, that is a different issue. But other than ACU mechanism, if any export is being done, and how to handle, how to receive the money, and that is with this subject to some conditions. What are the conditions? Are exporter should be a regular customer to the authorized the bank. Because he is doing exports to US, UK, Japan, and also say to Somalia, and the country of that country currency it is not easily, you cannot directly quote the exchange rate. So the exporter should be a regular customer of the bank, and there's a signed contract or invoice is in freely convertible currency. So this can be converted into a freely convertible currency. Here the problem is it is not having direct quote exchange, direct exchange ratio. So $10 is equivalent to this amount of rupee. So it's not there is no direct exchange ratio. So the exporter should have signed contract invoices which clearly mentions the freely convertible currency. Beneficiary is willing to receive the payment in the currency of the beneficiary instead of currency mentioned in the invoice, because the beneficiary, the exporter, he has said, okay, you can I mentioned in rupee, but you can give the money in dollars. So this has to be clearly mentioned in the invoice. Then AD bank has to satisfy the bona fide conditions. AD bank has to satisfy that it's a bona fide transaction. So the bank is the base with reference to export of goods and services. That is the realization of export process. So counterparty to the exporter or importer of AD bank is not of financial action task force mentioned in the jurisdiction. So counterparty to the exporter, that is other party, it will see FAD, that is financial acts task force. I have mentioned some jurisdiction of the countries. You should not be against that. So that point also you have to see. So this is with reference to the currencies which has got no exchange, direct exchange ratio. Now, foreign currency of the exporters, that is person resident in India. So how you can open the foreign currency? So a person is permitted to open account in foreign currency to participate at the international exhibition. So okay, it's a temporary opening. You sold some goods, you have received the foreign currency, you have to remit that money into that account, then you have to bring the money into India. So that period is 1 month from the date of credit. This is a basic thing that we will see. Open a temporary account, foreign currency account at abroad to participate at the international trade fair and exhibition, and deposit foreign exchange earned in sales outside India and repatriate to India. This is very, very important. So government has permitted. So under FEMA, you can open an account in foreign currency at abroad at the time to participate in international trade fair exhibition international trade, international exhibition, you have received the fund, but you have to bring the money into India from the within 1 month from date of closure of exhibition. It is say that you have to be very careful. You have to bring the money into India from the closure of the exhibition. Then submit all the full details to the authorized dealer bank by the exporter. This is a transaction we have carried out. This is a money I have brought into India. So open foreign currency with authorized dealer outside India. So you are also the authorized dealers are permitted to open, that is exporters are permitted to open foreign currency with authorized dealer outside India. The exporter should have got a good tracking record. Apply with full particulars in the form of EFC, that's a form, through the branch of the authorized dealer where the account is going to be opened. Suppose if he has got a bank and this authorized dealer has got a bank in UK with a with that UK bank, this person can go and open the account and submit the application to the authorized dealer, and the authorized dealer in turn they follow to RBI. RBI may consider and give permission. So it's not directly you are not permitted to go and open the foreign currency account at abroad at the branch of the authorized dealer, but you can make application to authorized dealer. Authorized dealer in turn they will forward the application to Reserve Bank. Reserve Bank may consider, and only after getting permission it is possible for you to open the account with the authorized dealer of the foreign currency. So Indian entity to open foreign currency account outside India, name of the overseas bank. Suppose a company is here, it's an Indian entity, they has got branch at say US. So US can open at US that entity can open the account, but this Indian entity is permitted to open, hold, and maintain foreign currency account. Remittances for the normal, that why you have to open, that is for the remittances for the normal business operation of the state business office or branch or relative. For that you are permitted to open account. Now SEZs also they are permitted to open account in foreign exchange with the AD. So the unit should be located in SEZ. There is special economic zone. You can hold the account in foreign currency with the authorized dealer, that is a bank in India, open, hold, and maintain foreign currency account, and it should be done only by the person resident in India are permitted to open it. Next one is open foreign currency account with a bank outside India. Now it is no authorized dealer, it's a bank outside India you are permitted to open, but you are a resident in India, you are permitted, but for the project and for service of exporters, you are permitted to open foreign currency account, and you can open, hold, and maintain foreign currency account. But everything you requires RBI guidelines. And this is the thing I want to say for today's presentation. This is with reference to the export of goods and services for part number 1. Here I am stopping the presentation. Next part I will release soon. And thanks for the patient hearing for the subject under FEMA, Foreign Exchange Management Act, that is FEMA Series 7, Part 1. 7, we can say FEMA Series 7. It's a Part 1 I've released, and this is what I want to say. Today, I'm going to stop the presentation. Thanks for patient hearing. Thank you very much. Nandri, Vanakkam.